How helpful would it be to have an accurate idea of how much money you'll have in your business bank account week by week over the next 3 months? Tune into today's episode where we discuss why a cash flow forecast will save you lots of pain and how to put together one in under 60 minutes. Hi there, team. Tony Fraser-Jones, the host of the Profitable Tradie podcast, hanging out with my sidekick, Phil Smith, today, who is a super good rooster. What's happening, my man?
Mate, yeah, feeling good. I'm a little nervous, actually. I've got a bit of an exercise coming up today, which should be a bit of fun.
2:30?
2:30. It's actually at 2:30, which is going to be good, getting the old wisdom tooth pulled out. So, yeah, nerves are running high.
How long has this wisdom tooth been an issue for you?
Oh, geez, about 5 years.
Right.
Yeah,
okay.
get a problem with it at least once a year and think I should take it out, and then it comes right and I don't, and it's time to take some action.
It is?
Yeah.
Yeah, you've been like a bear with a sore head a little bit.
Yeah, a wee bit, yeah. Yeah, I should have just done it ages ago.
Yeah, like if you need a cuddle beforehand, man.
Yeah,
I'll get someone to do it for you,
mate. I'll be looking for that cuddle. So, yeah. Anyway, pray for me, listeners.
Yeah. That's right. Pray for the big Philly bowl. What
right.
are we talking about today, man?
Mate, we're talking about cash and cash flow. So cash is obviously oxygen for your business, and without it, you just can't pay your bills and you go broke. So pretty important.
Kind of important.
And, with trading and service-based businesses, often your bank account goes from healthy to empty within the space of just a few days, and you don't even see it coming. So the ups and downs of your bank account often mirror how you're feeling about your business. It's good when you have cash, and you feel pretty rubbish when you don't. And often stress comes because, you actually didn't see that whole situation coming. You're just too busy getting all the jobs and projects done. But the thing is, it doesn't have to be that way. Yeah,
and this is so true. Like your feeling about where your business at is often tied to how much money is in the bank account.
Massively.
And when that goes up and down and you're not sure, you think you got plenty of money to pay the bills and then you don't.
Yeah.
It kind of messes with your head.
Yeah, totally. And it might be you looking, it might be, some office staff or something. And I find it's even more stressful when someone else comes up to you and goes, hey, boss, I don't want to scare you, but we've got all these bills piling up and there's no money in the bank account. What do you want me to do?
Yeah, it's like, we got wages this week. How's that going to work?
Yeah, do we have any invoices due? Because wages are due and we got no money.
Yeah, I reckon it's an important time to talk about it as well over sort of Christmas break as well, because it can be a lot going on then. Maybe you're shut down for a week or two, perhaps. You've got extra vacation you've got to pay for, holidays you've got to pay for, maybe some tax payments, and it's not fun.
No,
taking a break and then worrying about whether you got cash.
Yeah, it definitely puts a damper on the whole Christmas spirit, doesn't it?
It does. It's like the Grinch who stole Christmas.
A wee bit. So I'm sure you got a story to.
Have you read The Grinch that stole Christmas?
I actually have. Obviously having small kids, it's one of those books that gets pulled out. Yeah, it's pretty good, man. The kids like the movie as well, the Jim Carrey one.
Yeah. So his heart was 2 sizes too small.
Yeah, that's right.
And then his heart exploded.
Yeah,
or expanded.
Expanded. It didn't explode.
Yeah.
Luckily.
Yeah.
But if you're stressed out about your cash, maybe your heart will explode. So let's just let's bring the blood pressure down.
That's right.
And crack this code. So sure you got a story for us, mate.
Yeah, got a story. One of my favorite movies is The Imitation Game.
Oh yeah, it's a
great movie. Got Benedict Cumberbatch, who incidentally can't say the word penguin.
Really?
Yeah.
I didn't know that.
Yeah, there's who's that English guy?
There's
Graham Norton. Oh, there's a few English guys.
He's Welsh.
Oh, Welsh. Sorry, Graham. He was on the Graham Norton show and he couldn't say the word penguin. It was super funny.
I'll have to check that out.
Just not really the story, but anyway.
Yeah. I was going to say, guys, that was the story right there.
Yeah.
You learned all about cash flow forecasting.
Yeah, through the penguin. But the Imitation Game is all about World War II, and the Germans had the Enigma code machine, which was an unbreakable code machine. They could send messages to each other, and the Allies just couldn't crack it. And it was the sort of the backbone of their naval, strategy, and particularly sending U-boats to sink Allied ships that were going on convoys between Europe and America and up to Russia and stuff. Thousands and millions of tons of ships were sunk, and the ships had no warning about where these U-boats would be. They were flying blind, pretty much.
Yeah.
And so the movie is all about how they cracked the code of the Enigma, and a bunch of stuff happened there. They got some code books, and they had some machines they invented to actually help crack this code. Alan Turing, I think, is the guy from the Imitation Game, and he basically helped invent the modern computer because there was so much numbers they had to to calculate. to crack these codes. There's no way you could do it by hand, and they needed a machine to do it. Anyway, they cracked the code, and they were able to tell where these boats were going to be, and therefore they could, route the ships different ways as well. So I guess the moral of this story is a little intel goes a long way.
Yeah,
and
100%.
it's better to be, forewarned is forearmed.
That's
and
right.
You can make the move to defeat your enemy, and in this case, the enemy is their lack of cash.
Yeah.
And if you can plan out and have some intelligence about where it's going to be in the future, you can then do something about it.
Yeah.
Look, it's not much fun knowing you're not going to have any cash, but there's something worse than that, not knowing.
Yeah.
And so we want to, like the cash flow forecast is a bit like cracking the code, so you can tell where, cash flow is going to be on a week-by-week basis over the next 3 months.
Yeah.
It's super useful.
Super useful. And, I think you hit the nail on the head there. It's not about what you don't know, because if you don't know, you're actually in a lot more trouble. If you know, it's scary, but at least you know, and there's things that you can do, actions you can take, preventative measures, and you might even be able to avoid the same situation in the future. Even if it's unavoidable now, but we shine light on it, now we know what we can do differently. I mean, knowledge is power here.
Yeah.
And I think we've got to get that knowledge.
Yeah, and my number one rule in business is get paid, which is really making sure you got enough cash.
Yeah.
And so this is important. And in our coaching program, the $1 Million Tradie, we get our members to do cash flow forecasting because it's super important.
Bloody important. Well, look, if we don't do this, obviously we can run into some issues.
Yeah, and I think we've alluded to, the first thing is you can get surprised and just there's no cash. So you go from having lots of money to no money. A few supply payments go out, maybe a tax payment, maybe wages, and you're like, flipping heck, the cupboard's bare.
Yeah.
That's an emotional roller coaster because our emotions are very much tied to the money we have in our bank account. If the bank account's full, we feel good.
Yep.
And if it's empty, well, that's not good.
Yeah, and I mean, look, obviously, guys, emotions go up and down for other reasons too, but, I think there are always external things that are going to play with your emotions, but when you've got no cash in the bank account and there's the stress of that, other things externally will impact you a lot more. Because, it's kind of like the straw that broke the camel's back. And even if the things happening externally are really bad and they would have broke the camel's back anyway, they'll break it twice as bad when you also have no cash.
It's a special kind of hell not having cash in your business. It's not good. It's not fun. That's right. And, it can lead you to making promises that you don't keep, that you can't keep. You might make promises to pay people and stuff. But, you had no way of really knowing whether you'd have the money. You just did it to keep them off your back.
Yeah, that's right.
And that's like, compounding the hell.
Yeah, that's right. Well, now you have the stress of all the people coming.
That's right,
looking.
and all the work of fielding the calls or dodging the calls,
and you've got uncertainty on uncertainty.
Yeah, which is no fun. And you can go broke. Literally, you can go broke. Like a profitable business can actually go broke by not being able to pay its bills when they fall due.
Yeah.
Yeah. So that's
and I mean, we've seen it before, right?
Yep.
People say, if I'd had another 6 months, I would have been able to get on top of this. But the fact is your creditors come calling, and
they need to be paid.
Eventually, you need to pay the piper.
Yeah, they got families to feed as well. So
that's it.
It's fair enough that they get paid.
Yeah. Whereas on the other hand, we can get this right, and there's some pretty big benefits.
Yeah. Well, the first thing is you're on the front foot. So I think you're proactive. You can plan out where your cash flow is, and if you can see what's happening, you can make decisions around when you pay stuff or moving things around so that you've actually got the money when you need it. That's huge. It can take the emotion out of the bank account, so there's not any surprises. It's probably not a great feeling to know you're not going to have money, but at least you can be proactive and take control of the situation.
Totally.
And it's a situation where you're in control of things is completely different to a situation where you're out of control because you feel like you've got some power, and that's super important. You can keep your promises about making payments.
Yep.
Actually make promises not just to get people off your back, or let's be honest. You may have been in this situation where someone has promised to pay you, or you've been in the situation where you've made some promises and you legitimately think you can make the payment.
Yeah.
But you actually don't really know because there's no research or no planning around it.
Yeah, or you're factoring in one or two things, but not the full picture. You know, you might say, hey, but I've got this invoice coming in from this big job, so I'll be able to catch up on my arrears in this area. But then the thing is, you don't realize you're actually about to get hit with 4 more bills.
Or you've got a big tax payment due.
Yeah, that's right.
Or whatever.
And you need to be aware of the full picture because otherwise you're trying to balance one for ones, and it's just not going to work because there's more variables in that.
And it's a whole lot less stress because you're on the front foot. And you can be in control of it, which is super important.
Yeah, control is massive. I mean, it's going to give you all the confidence in the world and allow you to drive things forward. How do we do this?
So the best tool I think for this is what we call a rolling 12-week cash flow forecast. So that really simply is for the next 12 weeks, you have a snapshot of how the bank account's going to look every week for those 12 weeks.
Yeah.
And it's super simple. You basically start with the opening bank balance, you add all the money coming into your business, you take away all the money going out, and it gives you a closing bank balance for that week.
Yeah.
And so when you look across the bottom of the page, if you think about it as a page or a spreadsheet, across the bottom is your projected cash flow, your projected bank balance for that week. You can see where it's green, where you got money, or where it's red, where you're short.
Yeah.
And then straight away you're like, well, I can see what's happening here.
Yeah, 100%.
So that's as simple as it's that simple.
Yeah.
12 weeks, money in, start of the bank account, the money in, the money out, and the closing bank account.
Yeah. Pretty simple. And I think just one thing to clarify here is for those of you who haven't maybe not done something like this before, is when we say rolling 12 weeks, we're obviously looking from now all the way up to 12 weeks from now, but every week that pushes out a week, right?
Correct.
Because, this week is now gone and we add the 12th week from then.
Yep.
So you've always got 12 weeks in advance. And as you move through it, you're just adding the next week on the end, the next week on the end every week. So you've always got that 12-week snapshot.
Yeah.
So don't get to the end of the 12 weeks and then start the next 12 weeks.
That's not ideal.
Because then you're in the dark all over again.
Then you've got a 1-week forecast.
Yeah, that's right.
And the thing about this is you don't want to do this monthly. That's a lot of accountants or programs, accounting programs will do it monthly. It's not much good because you want to know on a weekly basis. That's when your bills fall due.
That's right.
And so that allows you to plan much better.
Yeah, and 12 weeks is going to give you full payment cycles for a bunch of different types of work because, some of your things don't get paid weekly and others don't get paid monthly. So we need that decent size
and
pay period.
The cool thing about 12 weeks is we can get pretty accurate for 12 weeks.
Yeah.
If we go out, 36 weeks or 48 to 52 weeks, it's a lot more of an estimate.
Yeah, a lot more speculation at that point, which really just doesn't help. So 12 is a good good amount of time.
It's 3 months.
Yeah, that's right. So let's look at the money that's coming into your bank account and the money going out.
Yeah,
because I think we want to look at some of the specifics of what we're looking for here, right?
Yeah, so the specifics are, first, if you think about, you've got a spreadsheet, it's probably the best way to think about it, and the first item is the opening bank balance that you've got right now. And then you want to add in all the money that's going to come in to the bank account in that particular week.
Yep.
And so you'll know, for example, what your contract revenue is. If you've got a payment due from a client that's coming in that week, you'll know what it is.
Yeah, that's right.
And so you would put in the total amount of money coming in.
Yep.
So, for instance, it depends on where you're based, what state or country. That might include the GST or the sales tax or value-added tax will go on, on top of that. It's the total money coming in, so you put that in.
Yep.
And then for a lot of people listening, you'll have service work or maintenance work. Now, it's difficult to know exactly how much that's going to be.
Yeah.
So you take an estimate.
Yeah.
And so you might estimate, well, generally speaking, we do, $27,000 of service and maintenance work a week.
Yeah.
And we get paid $27,000 a week from it.
Yeah.
And so you put that as an estimate.
Yeah, and if you're stuck on this, you just go back over previous week's been and just have a look at, hey, what's my average? And you can just estimate it'll be something similar to that.
Yeah. Or if so you do that for each week.
Yep.
And then let's say that you've got the Christmas shutdown.
Yeah, obviously.
Christmas vacation, New Year's vacation. So in those weeks, if your business is shut, well, you'd factor that in.
Yeah.
You may get some contract revenue in, may or may not, but you're probably not going to get the service and maintenance money coming in. So you would leave that blank. So you can be quite specific based on what the week is.
Yep.
Which will give you a really accurate picture of the cash flow.
Yeah, unless obviously you're an emergency service and maintenance.
Yeah, then you will have.
Some. Yep. In fact, you might even have a spike because everybody else is closed.
Yeah.
So, but again, you'll know this traditionally based on the patterns that you've seen in your own business.
Yeah. So it's super simple, and for a lot of people, the week where the 20th of the month falls will be a really heavy week where the money comes in because a lot of your contract revenue is going to come in that month.
Yeah.
That week.
Yeah.
So that's fine.
Yep.
But the service and maintenance work is going to come in every week.
Yep. And you might find that's similar with your payables too. So good thing is that should all line up.
Yeah, 100%.
Yeah.
And here's the thing. Let's say you've got some contract revenue projects coming in, and that's a project that you should be paid for in 9 weeks' time. That's when you're going to get it.
Yep.
And we get a couple of weeks into the cash flow forecast, and you find out actually there's some issues with that job, and you're not going to be able to make your claim when you thought you would, and therefore you're not going to get paid when you thought you would. Then you have to shift that that money to another week, the week you think it's going to come in. So you can keep it updated pretty simply. Or maybe it comes forward as well, either way.
Yeah, exactly. But either way, you should have a bit of an idea of what's coming in. And so that's the first thing you put in after your bank balance. So bank balance, and then we look at all the money coming in. So then we got to look at what's going out.
100%.
Right.
Well, actually, just a small point. With money coming in, it could be any other money. Let's say you sold some equipment or whatever. That would go in there as well.
Yeah, 100%.
Yep. The money coming out, pretty much the same. So you just take all the money that you know is going to come out of the bank account, wages, suppliers, and like you mentioned, Phil, they're going to come out on the 20th of the month for a lot of people. So you'll have a big wad of money going out on the week that falls on the 20th of the month.
Yeah, that's right.
You'll have your other overheads, lease, phone, marketing, accounting, etc. And here's the thing that's super important to put in. And this is why a cash flow forecast is different to a profit and loss statement, because it's about money in and money out. The profit and loss is about invoices in and invoices out.
Yep.
The cash flow statement's got to include when you pay taxes. And this is the thing that really kills a lot of businesses.
Yeah, 100%.
I got, we're doing fine, and then I get hit with this big tax bill.
Yeah.
Maybe it's your payroll tax. Maybe it's a GST or a VAT tax, sales tax. Maybe it's provisional tax, so you've got to pay your provisional income tax as you go along through the year.
Yeah.
You need to put that in the week that it falls.
That's right.
Maybe drawings as well, or any loan repayments. They've got to go in there as well.
Yeah, and some of that stuff's not even going to be on your P&L, so again, that's a bit harder to see, and that's why you need to be aware of what's happening off the P&L as well, and put in all of the ins and outs that way too. Yep. So again, I think with some of the tax stuff, look, if you're unclear on that, it's a really good idea to speak to your accountant and just get clear on what types of tax that you're likely to pay, when they're going to go, how does that look, how much money should we put aside, all that kind of thing. Because especially if you're quite new to business, that's, I think, one of the biggest ones that we see is people that are quite new to business. The first time they have to pay provisional tax, for example, they're like, I didn't even know that was a thing. And you thought you had a lot more money than you did, and it can be a real nasty surprise. So if any of this is a bit murky to you, or you don't know, then hey, go find out. Like it's really something you need to do.
Or the flip side of that is, for a lot of established businesses, they're a bit tight on cash, and tax is the thing they don't pay, which is a bad idea. Because the tax man is the one person you need to pay, because they can put you in a world of hurt really quickly.
Yeah, that's right. Other people tend to be able to wait. The
government's pretty greedy for their tax.
Agencies don't want to wait.
They don't want to wait, and that's important. And the reason people get into trouble is because they're not doing a cash flow forecast. They haven't planned for the tax.
Yeah. And
so when you do the forecast and plan it, then you know it's there.
Yeah, that's right.
So pretty simple.
So look, what we've done is we've put in our opening balance. We've put in the money coming in. We've put in the money coming out. So now what?
Well, just a quick. The money coming out, then we can figure out what the end balance is. So it's just opening balance plus money in, less money out, your end bank balance for the week. Perfect. Yeah, and so you can just look down the 12 weeks to see how you're tracking. Are you good or are you bad? Yeah. There is, just before we jump into how to do this, I know this is a bit dry, but it's super important.
Nothing too dry here. I think that's the key. Is topics like this can sometimes feel dry, but the driest details are the most important ones.
100%. So and you know, if you're listening and you haven't done this, do it, because you will thank yourself later.
That's right.
If it's difficult to put the cash flow forecast together, all my top tip is grab your bank balance, your bank statement for the last month, and basically that's all the items you're going to need. Particularly in the payments area. Yeah. And you can use those. And we have a cash flow forecast, a weekly rolling cash flow forecast template that we give our members, and we'll pop a link to it in the session notes. If you want to grab that, just grab that. That'll be a great starting point for you as well. We'd love to help with that.
A lot easier than trying to put it together yourself.
100%.
Yeah.
Yeah. Because this will actually literally take under 60 minutes.
Yeah.
If you get that bank balance, bank statement, and just fill in the details. It's actually pretty simple.
And honestly, once you've got your initial 12 weeks set up, adding that extra week every week just to keep it at 12 is pretty short. It doesn't take that long, right?
Not long at all. And here's the thing. If you've got a team, this is something that your office team will be doing for you, and you can just check it.
Yeah, that's right. So makes it pretty easy.
Yeah.
So obviously we got that spreadsheet. You don't do it monthly because you pay bills weekly, so we want to stick to that. So obviously adding the 12th week every week, so we keep that 12 rolling weeks. So let's talk about how to use the forecast now that we've built it.
So we've built it. So the purpose of a forecast is like the cracking the Enigma code, is to have the information so you can avoid problems.
Yeah.
And so that's what you do. You look down and you can see, well, where am I going to be short of cash over the next 12 weeks? And we do something about it. So you can actually prepare for it. There's lots of things you can do. The first thing is you might think, well, actually, we're pretty profitable. There's a couple of periods in our cash cycle where we're short. It might be the 20th of the month. Maybe you get an overdraft to cover that.
Yeah.
So you've actually got the cash to fulfill your obligations.
Yeah.
And then the money will come back in. So that's definitely an option, getting an overdraft. And a lot of people freak out about an overdraft. It's like, I don't want an overdraft. But lots of businesses have overdraft.
Yeah.
It's a way of managing your working cash, working capital.
That's right. And hey, look, it might be that you make some improvements over time and you no longer need it. But if you've got it, it's just going to help you get through some tough times. Obviously, you don't want to live in overdraft right at the hilt of it because that kind of defeats the purpose. But if you've got it there when you need it, it can help you through.
Yeah, 100%. The next one is you can actually start to really drive project completion. So you can see how the impact of when you finish a project affects your cash collection.
Yep.
And that really can put the heat on you to get some projects finished and get them claimed and invoiced really promptly so you get the cash in.
Yeah.
It's like a target or a motivation for you.
Yeah.
When you can see the impact of it. So if you can pull the project, a couple of weeks forward, get the cash, you're like, sweet, we're going to be fine. If it doesn't hit the target or it's a couple of weeks delayed, we're in a lot of trouble.
Well, you can even sometimes change when you were going to invoice. So sometimes you get to the end of a project and you're like, oh, I'll get the invoice out sometime the next week or two, which again is bad practice, by the way, but that's a separate topic. But, if you can see that you're heading for a bunch of outgoings, a bunch of payables, and you'd intended on invoicing for this big project, in 2 weeks' time, but you need the money in 1 week, well, maybe just invoice a bit earlier. It just helps you to stay in rhythm with when you're going to need the money.
Well, it might actually help you, put your own feet to the fire instead of like, oh, well, I'll just go and, finish something else. I'll get onto the invoicing at some stage. You're like, flipping heck, I actually have to get this invoicing done. Otherwise, I'm not going to have the cash I need.
Yeah. Or maybe in terms of scheduling, like I could send the guys to start this other new project, but maybe we just finish this one because we really need to be able to invoice something.
Yep. Or it might be that you get better at claiming, partial projects.
Yeah, that's right.
So you try and bill out as much work as you can by the end of the month rather than, waiting just to finish that stage if your contracts allow.
Yeah.
Or maybe structure your contracts that way because once you see how your cash looks, it forces you to change how the cash comes in. That's the whole point.
That's right. And you start to think about it differently because you have to, rather than just feeling like you're at the mercy of, well, when we finish it, then we'll invoice. And once we invoice, we'll wait to get paid. And we're just kind of at the mercy of everyone else. And it's like, well, if you can see it in black and white, you're like, I have to make a change.
Yeah.
Good news is you'll make that change and it'll be no drama. You'll actually just get paid more regularly and it's probably going to be no problem.
It could be something as simple as, and this is something we talk with our $1 Million Trading members about a lot, is how often can you get a deposit for the project and how big can you get the deposit? And this will depend on where you're based. Sometimes there's some legals around this, but check it out. But try and get as big a deposit as you can because that helps the cash flow.
Totally.
Another thing is, you negotiate with your suppliers.
Yeah,
so
this is massive.
We've talked about the you getting paid side of it. What about your payment? Can you negotiate different terms with your suppliers, or at least have a discussion with them if you can see in 6 weeks' time that you're going to have a real pinch point?
Yeah,
because suppliers are like human beings. It's a relationship, and if you go to them and say, "Hey, look, Phil, in 6 weeks, look, we're really looking. It's really tight. We have got these projects on. Here's our cash flow forecast. We're good for it, but we might need a little bit of help here."
Yeah,
they're going to respond much better to that than, you're not paying and then having to follow you up.
Well, honestly, Tony, they're going to respond really well because if you think about the position of a supplier, it's like, let's say you owe me money. I'm the supplier, you're the tradesperson or the service business, and you owe me money, you've got a bill to pay. Now, in this case, if you come to me and say, hey, Phil, here's my cash flow forecast. As you can see, I'm going to get the money. It's just going to be 8 weeks instead of 6 weeks. Do you reckon you could help me out with this? Of course, I'm going to say yes because the thing is I want to collect this payment from you. But the real value for me is the fact that you're going to make lots and lots and lots of future payments. So if I really kill you on this one over 2 weeks, then what I might actually do is be ruining my golden goose. And if I put you in too much trouble, you might not be able to come back. And even if you do get through this, you might change supplier because at that point, you think I'm a dick. And as a result, I actually just ruined the recurring revenue that I had from you, which is honestly most of the value. Like this one invoice, yeah, sure, it's important, but the big value for me from you is all the future invoices you're going to have. So of course I'm going to help you out if it keeps you in business and keeps you paying me long term.
Yep.
It's basic.
Yeah, and the thing about payments and cash flow is it's about confidence. So if your suppliers are confident in you, then that's the main thing. And they obviously want to be paid on time, but they want to get paid is the main thing.
That's right.
And if you can show them that you're working this stuff out, I can guarantee you that of their 100 other clients, it's like 2 other people are doing something similar, because most people are just winging it.
At least.
So that's massive.
Yeah, I think it's huge. And just remember, have faith in your suppliers. They're going to want to help you. It's in their best interest.
Well, it's like a codependent relationship.
Yeah, exactly. And
in a good way.
I think, again, just to really want to highlight what you said there as well, is one key thing with this is, like you said, you came to them with your cash flow forecast. So rather than coming to them with hopes and dreams, hey, Tony, honestly, I promise I've got money coming in. I promise, man, I promise. It's like, that's not confidence. Whereas if you come in and say, hey, as you can see right here, I'm going to have this pinch point, which is uncharacteristic. I usually pay on time, but you'll see this pinch point here. You'll notice 2 weeks later, I'm in the clear. So, reckon we could move it to there and we'll be okay. Suppliers going to be like, yeah, no, cool, man. Like, because they can see it in black and white. Like, they don't have to take your word for it. It's right there.
And think about how that changes your emotional experience of the business. Because if you number one, do nothing and don't have a forecast, you'll get to the point you can't pay them, and that's super stressful.
Yeah.
Or 2, if you do the forecast and you do nothing and say nothing to them, you've got all the stress about how they're going to react. So it's very stressful for you. Takes a lot of energy, takes your focus away from doing the business. If you go and talk to them and get an agreement, you're like, phew, it's all sorted. Yeah, nothing to worry about. Yeah, we're under control.
That's right.
Yeah.
All right. What else can we do?
Sell assets.
Yep.
So obviously that's not ideal, but maybe there's some stuff you can sell, van, diggers, whatever.
Well, depending on the level of your problem. I mean, if you've got a big problem, then it might be something you have to do.
Yeah, 100%. Maybe you can get some finance as well. So if you actually need some working capital for your business, you've got an overdraft, but you might actually get a business loan if you've what can happen sometimes is people will buy a whole lot of equipment with cash and absolutely stuff their cash flow. Yeah, because they should have probably put it on a loan to help smooth it out. So that's a strategy that's okay.
Yeah, especially if you're buying big expensive equipment.
If you spread the cost of that asset out over the use of its lifetime of its use, then that's fine.
Yeah, that's right. And I think the thing is like we heard it a lot of times. I don't like finance. I don't believe in it. I don't want to be in debt. And I'm like, I'd rather be in debt with like really, really cheap interest rates on some finance on a piece of equipment that's going to help me make heaps of money at good margin every month. I'd rather be in that position than be completely out of cash, unable to pay my bills. But I paid for the asset in cash, so I feel good about not having finance. I'm like, you're in a worse position.
Yeah, and that's just a headache.
That's right. Yeah. So like, don't fear finance. In fact, there's a lot of really good deals out there. We can get great interest rates, and it's actually better than being without the cash.
And like I said, there's no shame in spreading the cost of an asset over its lifetime.
That's right.
You do that any with depreciation. So
that's right. I mean, whether you like it or not, that's happening.
So we have a like I said, for our $1 Million Trading members, we have a resource called the Weekly Cashflow Forecast Template. Yeah. And we'll drop a link to it in the notes. So if you want to get a head start on this, just grab that and have a lash at it. I reckon you can crack it out in under 60 minutes.
Oh, easy. Just access to your bank account. And you're good to go. Yeah. Sweet. All right, let's land this plane.
Alrighty. So cash is definitely oxygen for your business, and to crack the code on your cash flow, you need to know what's coming up. So get your cash flow forecast done so you can front foot any issues before they happen. Thanks heaps for listening, team, and we'll catch you all again next time.
See you later.